Good morning, good afternoon, or good evening, and welcome to the Bull versus Bear webinar on Thursday, the 23rd of May. Steve Miley here on the call for trade day. Welcome, everyone. I'm going to go for our usual regular run through in here today. We'll look at the macroeconomics, the fundamentals, the central bank events, geopolitical events that are shaping financial markets right here, right now. Take a look at the calendars, take a look at the charts. Right, first of all, let's go to the main event. Right, so the main event was Nvidia. We had Fed as well. Let's start with Nvidia. Blowout numbers, both here on the EPS and the revenue guidance. Basically, every metric that we got from Nvidia was positive. So Nvidia stock on post market last night and pre market today. Looking strong, and obviously not only sending Nvidia higher, sending the chip sector higher, sending the semiconductor sector higher, not just in the US but globally, and dragging broader stocks higher with it. I say so. We're having everything being pulled. Not everything, obviously, but any kind of semi-related stocks being pulled higher. The AI boom continues. And supercharging the wider market. So we're seeing the Nasdaq and the S&P hitting new all-time highs again in here this morning. So that's kind of what I suggested we could happen. The market's priced in a 10% swing in Nvidia by Friday, by close of business Friday, from Wednesday through Friday. So and the market's kind of delivering that, and the swing is obviously to the upside. Keeps us in bull mode. I mean, I don't see us shifting out of that bull mode anytime soon. I think we could run this right the way through to the end of the week and potentially beyond. I mean, the other thing is, if anything, the Fed were quite hawkish in the minutes. Okay, we have had that better CPI number since the Fed meeting. All right, so we've had between the meeting and the minutes, the CPI data was released, which was better than expected. However, the Fed were relatively hawkish, and even with that hawkishness from the Fed, markets, the steamroller that is AI, that is the most important, the monikered most important stock on the planet, Nvidia, is just driving everything higher. So, and I do not see that stopping. It's just running right over I mean, it's not saying it's correct longer term, but it's riding roughshod over everything in here at the moment. Looking in here, we also have today, looking ahead. So we had the Fed. I'll come to the Fed shortly. Just looking at the calendar for today, we've already had this morning kind of a mixed bag, but mostly you can see slightly better than expected, but kind of mixed in here. That we have the PMI data. So this is from HCOB/S&P Global. You can see all the data here for Europe, mixed, but green outweighing red. And generally, UK is a little bit of a wobble in here for the UK. And going into today, what do we have? Well, we get really the main focus in here is going to be on the US versions of those. Remember, this is the flash PMI. So this is data for May. So it's very, very live data in here. And we're not even at the end of May yet. This is the preliminary flash PMI data. So we get that from S&P Global for the US today at 9:45 Eastern. So all eyes on that. Bostic is also speaking. Bostic has been speaking quite a bit recently, so we're not probably expecting anything fresh on you from Bostic. And there's a quick article there on German business activity. That's the PMI data. Growing for the second straight month. Remember, Germany, the powerhouse of Europe, so that's a positive as well. We've already covered the earnings there, so just going to 5 things to start your day in here. The other thing, because they don't mention in here, I will mention now, but the UK called a general election for actually Independence Day, July the 4th. So July the 4th, the UK goes to the polls. Hasn't had a significant impact, a massive impact on markets, but what we have seen in the UK is a slight dampening of the UK benchmark, the FTSE 100 equity stock equities. So they are slightly lower in here this morning, potentially on the back of that, because the uncertainty that obviously an election brings. The current incumbent and the Conservative Party currently trailing in the polls to the Labour Party by about 20 points in there, but I mean, not really impacting on what we are looking at in any way, shape, or form. Let's just go through 5 things to start your day. I mean, nothing more than I've really said in here. Nvidia blowout, great numbers from Nvidia in here. So tech stocks across the board in the US and elsewhere, all pushing higher on the back of that. The Fed, though, higher for longer. We've mentioned that, so that's the concern there. DuPont breakup in here not really impacting us, and talking about the PMI data and Bostic speaking in here today. So Fed minutes show officials rally around a higher for longer rates. We've spoken about that. Nvidia clears the way for AI stocks to keep powering higher, and put to rest concern about a slowdown in A&I spending. They're also positively pointing towards the companies that are buying their chips in here. The prospects for them monetizing, the expenditure is positive, so that can keep that moving forward in here. We don't need to look there. Stock gains in the juggernaut in here, AI juggernaut, same again. And again, it's not just US. Asia chip gauge rises to a 3-year high, and TSMC rises to a record high in here as well. So positives from TSMC. On the back of that, another article here on TSMC sees annual sales growth to be 10% in semiconductor industry. So again, in here, positive from another chip maker in here, TSMC, to add to the positivity around Nvidia, so the Asian stock index pushing higher on the back of that. Nvidia aces Fed. So despite the more hawkish tone from the Fed, Nvidia outdoes it on the more of the impact. Tense Taiwan. Okay, yeah. So on the geopolitical side, we are seeing in here some military tension around Taiwan. China, where is it in here? Maybe it's not in here, but China running some what do they call them, like drills, right? Around China, around Taiwan in here, and so that's a potentially negative. But the steamroller, the juggernaut of AI and Nvidia, markets not really focusing on that at all in here at the moment. Stocks catch a ride higher with Nvidia. Investors, though, cautious over rates. Incidentally, we'll come to the rates in a second. Rates, yields, 10-year yields hardly moved on the Fed in here. Slightly, maybe I think there's a slight negative aspect to the short end. If we look when we come to the CME Fed Watch tool, or negative as in for rates going lower, but nevertheless in here there wasn't a massive reaction from the market to the Fed minutes, even though they were clearly more hawkish than expected. All the same headlines in here, guys. Nothing really more to add. Here's the CME though, Fed Watch. We go to September. I think this is we can go and look at the historicals, although I don't think this actually updates from last night on the historical, but I'll go take a look in a second. But here we have for September now. We've got basically, just under 40% chance that we're still unchanged in September. So 60% chance of a cut, 40% chance we're still unchanged in September. And if we go to the end of the year now, we've still got that 12% chance we're unchanged at end of year. And if you look at it, so we've got a 36% chance we've cut at least once. And then the balance in here, and then, so then there's a chance that the chances then, so 36, 46, 48. So there's only a 52% chance in here, if we add all of this up, right? Only a 52% chance that we've cut twice or more by the end of the year. So the market's slowly moving towards maybe we're only getting one rate cut by the end of the year. So that's quite interesting. Let me go and take a look at the historical in here for the September cut. And I think that has, so for the, get rid of all of these. Yes, it's hardly changed, actually. It hardly changed yesterday. So, very, very little change in here from yesterday. But if I jump to, before I do the run around actually, no, I'll just run through the stocks first. But so Asia up in Nikkei, but the Hang Seng actually down here. So Asia obviously being helped by that from the overnight news from Nvidia. Europe is up. FTSE, though, struggling with the election being called as a bit of a dampener on the FTSE, the UK FTSE. But the German, the DAX, and the French CAC up on both Nvidia, plus obviously that relatively positive PMI data that we've had this morning, overnight if you're in the US, this morning in Europe for the German DAX and the French CAC. And then if I just pop this open, we'll see that futures are notably up this morning. But we'll go take a look at those on the charts just shortly. But I just want to go off to look at so we're up a 4% up on the Nasdaq in here, and 0.6 up on the futures for the S&P 500. But look at bonds in here. Bonds, this is the 10-year yield in here. Hardly changed yesterday. hardly moved. We've been completely sideways this week and stayed sideways yesterday through the Fed. So the yield curve, the yields hardly moving in here. And bond markets, sideways, having had that setback previously, but having built on a strong rally from April. And still, for me, the underlying theme in here from the technical perspective is still to the upside for bonds in here. But at the moment, it's very much in consolidation. And we did get a dip. This was written pre-NVIDIA last night. So we did get a sort of a slight dip yesterday, but obviously that's been reversed. So we've stayed bullish on here on the stock indices. I'm going to start with the bonds in here just because, you can see, apart from that little spike there to higher prices, lower yields was after the CPI data. So for me, this is still a base. The pressure is still for higher prices, lower yields, but, hardly moving in here. In reaction to the Fed. Obviously the bond market's not really impacted by NVIDIA, but there's the real impact in here. Well, this was the real one here. NASDAQ in here steaming higher in here, good enter yesterday and overnight slash this morning, powering ahead. That's up 1%. And for me, we're at all-time highs. So look at the Fibonacci extension levels we have as targets in here. We've got upside targets in here on the NASDAQ. So maybe dip in and use those targets as potential profit takes if you are in longs, or if you want to oppose this move, which I wouldn't suggest in here. But this could run really easily run. We've been in this kind of sort of a consolidation. We spoke about this flag pattern, right? So we had the kind of flag pole in here from the CPI data, and it's kind of in this consolidation. It started to break the last couple of days, then boom, obviously up and pushing higher as we speak. And a similar story on the ES in here, making new highs and been capped off, over the last week in here, reluctant to push through like 53.50, and then boom, we're up through there. And again, that kind of flag in here. So we had a spike down pre-CPI, then that's the CPI push higher, then we've been completely in this kind of sideways flag, pennant, whatever you want to call it. Avoided the triple top up here. We spiked down in here, avoided that yesterday, held the low here, avoided the triple top, and then boom, new highs. And so there's a real risk that, if it's a flag, right, then with this move here as the flag pole, extended out. So, the next couple of days, I wouldn't be surprised to see markets up. S&P Nasdaq up 1 to 1.5% today, and maybe the same tomorrow. I wouldn't be surprised. Remember as well, guys, just to point out, if we haven't sent the email's going out today, tomorrow there's restricted trading hours. It is on Monday. Remember, I'll remind you tomorrow as well. Monday is the Memorial Day holiday in the US. It is also actually a UK holiday, so you're going to get hardly any liquidity. I would strongly suggest don't trade on Memorial Day. I can't stress enough. I know you guys like to trade, but just have a break. Take the holiday. It is a holiday. Take the break, because it's going to be far less liquid, and that can mean to pockets of illiquidity in the market hopping around, and you don't want to get caught on something when the market's got a lack of liquidity. So it's not that you're not going to be able to get out. You're not trading any kind of size, right? But the fact is, it could just jump around. It could be jumpy. So I would strongly suggest staying out of the market on Monday. We do have restricted, partial close, early closes. So the market does open Sunday night, but then closes earlier on Monday. And so we are sending out an email. Make sure you know the hours. It's not on us to tell you all the hours. It's not on us to tell you all the hours. I'm pointing out that the market's got a partial close. Go and work out. For different products, the closing times are different. If you're in different time zones, obviously you need to know the times on your own time zone. Okay, so, but my strong suggestion would be leave it until Tuesday. All right, guys, I'm going to wrap it up there. I'm staying bullish. I think this has got a lot of upside to come. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you to round off the week with our TGI Friday webinar tomorrow.